Well, Ben Bernanke is walking a tightrope this week. The inflation hawks want to hear him get tough on higher prices at this week's Fed meeting. A completely different group, though, wants him to say the economy will be sputtering along for months. Markets editor Andy Cinco is following all of that. Andy.
Betty, it's quite a conundrum Mr. Bernanke finds himself in. You know, on the one side, yes, a weak economy means low rates. But on the other hand, if you think there's going to be inflation down the road, then you want higher rates at some point. And, of course, there's this whole question of how does the Fed extricate itself from the extraordinary programs that it has in place. So that's why somebody like Derek Constam at Credit Suisse says this morning that the Fed is walking on the razor's edge. If he leans one way too much or the other, it could send ripples through the market. So he's got to stay right on that razor's edge. And speaking of inflation, another interesting point coming out from Jan Hatzius, the chief U.S. economist at Goldman Sachs, who is, more or less looking at low rates for a long time and looking for a signal from the Fed that we do indeed have a very weak economy. Look at the Cleveland Fed's median CPI index. It's a measure of underlying inflation, but look at the move down on the right-hand side of that chart. It really shows you that there's been quite a lid on inflation, and that not only is it falling, but continues to fall. And so Fed language now will become a key thing, Betty, as we watch for the meeting as it wraps up. How will they signal that they're watching both sides of this equation, inflation versus growth? Betty?
Okay. Thanks so much, Andy.